All right, good morning, everyone. It is 8:52 in the morning of December 30th, 2021, and this is my pre-market strategy session for the day. Okay, so the first thing we have up here is RELI. RELY is one of these really interesting small caps here that popped up on news. I think this thing did an acquisition. Let's see. Yeah, this thing's got a history of doing some acquisitions here. This is like the third or fourth acquisition this company's done in the past couple of years. Apparently, Wall Street likes the sort of the activity that this reliable global group is taking part in. So here on the 21st of December, it's actually, first of all, let's see, there are 11 million shares outstanding on the stock, and the float is, let's see, the float is only 1.17 million shares. So the float is really low. Here it traded, let's see, 75 million shares on the 21st. You can see this big red candle, red volume candle, and there's another big red volume candle here on the 28th where it traded 46 million shares. So that on its face, right, is undesirable. Right now, what we've got are, let's see, in the past 6 trading days, it has sold what looks to be multiple, maybe 20 times. Let's see, 6 million on a green day, 10 million, 16 million. So 23 million shares have been traded on the green days. These three green candles have only traded 23 million shares total, right? And so then, let's see, on these, we'll call these two red days. This red day is it's 2 million. So let's see, 75 million plus 2 million, we'll round it up to 78 million, because there's a kind of a fraction here. And then this day is another 46 million. So let's see, 46 plus 78, 124. And then what did I say for this one? 20, let's see, 6, 16, and then 23 divided by 23. So the selling has been more than 5 times greater. The selling volume has been 5 times greater than the buying volume. And so it's not encouraging. However, because this thing is on, I guess, such a move up, right? A small green day can move it because it has a 1 point, let's see, the float is 1.17 million shares. A small green day here, you can see on volume, has a rather significant effect on the run up in its price. And so you can sort of call this a bull flag right here, right? Kind of. So, what will it do today? If I were to guess, I would guess that it's probably going to sell off. It's probably not going to run up. And the reason that I'm saying that is because it seems to me that Wall Street has really put a kibosh on low float small caps. There seems to be just a tremendous amount of noise on the market these days on these kinds of shares. Will it give a trade setup? I think it will. I think there will be a trade setup here. And actually, you know what? If it breaks above today, if it breaks above this 825 level right here, breaks above, tests, and then keeps moving, this thing really could have a lot of momentum behind it. But it's kind of up to, I don't know who it is, Wall Street, the brokerages or whatever, but whenever these things, as of 24 months ago, were, really clean moving and had all these really great setups and everything. But nowadays, they've put this noise machine on the stocks when they do what used to be a small cap momentum play, and have just turned it to mush. So here it is on the 21st, gapped up pre-market, and then just kind of was flat, really. Gapped up, hit a high here of 825, and then just sold off for the rest of the day. This is in the first 30 minutes of the market open. I don't really have any evidence that today will do anything differently. It's possible, but you see, most of the big moves happens in the pre-market here, and it's like Wall Street doesn't regulate, or the retail trader. Most retail traders don't get involved in pre-market activity, and so this is more akin to what it was like to trade during regular hours as of about 2 years ago. You can see here a break here in the pre-market. You've got this run-up candle, period of consolidation, and then a break above the high is an entry here for the next run-up. In this case, it would have been from 660 a share to 780 a share, roughly. And so today, I just kind of get the feeling that there's not going to be much difference today than there were the previous days. I could be wrong, we'll see. Be careful with your entries and take profits quickly if you are, averaging into a position average out of it, so on and so on. ISIG, this one's a really low float stock. Let's see, this one only has 922,000 shares as a float, and its shares outstanding is only 1.768 million. This thing came out with news back here on the 6th of December, and something about it's a weird, I've never seen this before or heard of it before. Insignia Systems launches review of strategic alternatives. And it's kind of like, okay, it was worded differently before. I don't know, maybe they changed the headline there or something. I'm not sure. This thing can really run. And this isn't the first time I've traded this thing before. Going back, this thing can really run sometimes. I've traded this thing a couple of times before, and it's been nice. I think I've traded it 3 or 4 times before, and I've made some decent money on it. Just be ready to exit your position quickly, though. It pops up, falls down. It's a tough trade, but if you know what you're doing, you can make money on it. All right, and the last thing I have here on watch is Tesla. Tesla here is here's this resistance line here on Tesla, and where this thing goes, how much further, so on and so on. I have no idea. However, you see the alarm clock here on the screen. If it hits 1,050 today, I'm going to take an entry there on the long side. This thing, it's been testing this resistance line now here for, let's see, there's first test in November, second test the beginning of December, end of November, then the beginning of December, and then here we are just 3 days ago at the end of December. A break above this consolidation pattern right here we ought to be aiming at all-time highs, at least to try and get to all-time highs. Whether it makes it there or not, I don't know, but that's the deal. So I'm looking for support here at 1,050 roughly, for then a push higher to break through this resistance, and then a continuation on the way up. All right. You can see I actually came down here and did this beautiful, look at this gap fill back here. There's this gap that was created here on, the 22nd of October. Gapped up $40 a share, looks like. Yeah, about $40 a share. And then, kind of ran up and has been consolidating, came down and filled that gap. Look at that. Came down and filled the gap and has taken off from that gap. Really, really nice pattern. I haven't paid much attention to Tesla, and I wish I had started paying more attention to it quite some time ago. This stock really gives a lot of trade setups. And you can see here the daily range here is significant. I mean, $1,121 to $1,200. I mean, that's an $80 move in one day. These are incredible moves, and it gives just a lot of entries, a lot of really, I wouldn't say obvious entries, but the entries are rather predictable, rather simple patterns to decipher. All right, and so today a bounce off of 1,050 is what I'm looking for. We're about 15 bucks away from it right now. Might go a little bit below. Not worried. It'll be, it might go down to 1,000. Down here. I doubt it will go that far, but we'll see. We'll see what happens. All right. So yeah, that's pretty much our trading strategy for the day. The SPY today. Let's see. Right now, the SPY. Yeah, if it opened up right now, it would open up 0.11% higher than its previous close. Looks to me like the SPY is putting in a bull flag here. After nearly a 6% run from the lows on the 20th of December to, the 27th of December there, it's going to take a pause. It might move a little bit down, might move a little bit up. I'd really be surprised to see it run up here without coming down and testing the low of this big run-up candle right here on the 27th. I think it would be an obvious buy if the SPY came down to 472 over the next, week or two. This spot right here would be an obvious and lucrative spot to make a trade. VIX here, so the VIX is working on breaking down, which is really nice. I definitely would like to see it break down below this resistance, or actually support line here, break down below, test, and keep going lower. I think we're coming into a bullish period in the market. I think a lot changes by the middle of next year, by say July or August 2022. There's some economic realities coming at us that a lot of people are warning about. For the time being, though, everything's looking okay. It'll be the next downturn in the market. I think it'll be sustained and lengthy, but it won't happen until the retail. Right now, there's about $4 trillion on the sidelines in the retail trader, and it won't be until the retail trader jumps in and starts buying that everything takes a huge dump. It's the way it goes. That's how it goes. So it's called dumb money, and it's so mean, but it's true. So when you see the irrational exuberance and everybody is making money on the market, everybody's got a story about how they invested in stock XYZ and it's gone up 50% and so on, that's when it is time to get cautious. We're not there yet. Right now, everybody's like, the sky's falling. I mean, the stock market takes a dip here of 3% or something. Even right here, and people are freaking out. And there's nothing to freak out about. And it's just the way it goes. All right. That's my morning strategy session, everybody. Good luck out there. Keep your wrist tight. Click like, share, subscribe, leave a comment, tap the bell, and I will see you at the recap. I am out.